Technology, healthcare and biotechnology are the focus as we see energy giving way and possibly leading inflation down. This could also allow that seesaw of the growth companies to thrive once again. Gary Glover is here to update us on the market, his trading shares this week, and give us a recap on what that 0203 base building was like after the growth crunch last time. Good morning, Gary. How are you?
Yeah, no, I'm great, Chris. Good.
I was happy to see you put that 0203 in because we've referenced that so many times. So it'd be good to get a little recap on it.
Yeah, it was funny. Actually, it was actually stronger than I thought that period. Because I sort of remember it sort of was a bit of a grind at the time, and yeah. But so if you look at the weekly, sort of the longer term setup, it because obviously that the NASDAQ was off 80% in 02, so it was a massive growth crunch. So it was those stocks were decimated. But yeah, it took a while to go off the floor, and it sort of took a while to build. But when you look at the daily chart, you go, "Oh, that actually built quite nicely." But if you lay it next to the carnage, so I'm not laying it next to the carnage there. I'm just sort of putting it as a, just showing the first couple of years there against maybe the end of the carnage as opposed to the full carnage. If that makes sense. So
so we can't, on this chart that you've put in here, we can't see the peak of the market and the full slide down on the left hand side. You've zoomed in after that and just shown us where the base was built, right?
Yeah. So I mean, a good example of that is I think it took Amazon, was it 8 years or 10 years to go back and retest the high after getting crunched from what I think it was 102 down to $6. I think it took 8 or 10 years for it to go back to $102. So it took a long time. So yeah.
Well, that's
yeah. But if you look at the sort of this sort of chart here, which is a weekly chart, it does sort of show that it's I think it worked it out there. It took just over a couple of years to sort of double in value. So it's still a fairly decent recovery. And it took 31 weeks, which I thought was sort of interesting there, to actually sort of rally up, come back, make a high low, and then break to a new high. So a lot of people are sort of, a lot of professional traders will look for that break. So, because obviously we've got lower high, lower high, lower high in a bear market. Once you actually break to once you break a swing high, then that's a good sign. So I know sort of someone like Jim Ropel, who's a long-term sort of buy and hold sort of growth momentum, who sort of probably buys these stronger stocks on the board and holds on to them longer than most people can, and then trades them along the way. I think that's a sort of signal here looking for, is sort of a break above a swing high there, sort of breaking. So I know he sort of was commenting on the NASDAQ there recently along those lines, but it took 31 weeks back in 0203 to sort of do that, whereas I think we've done it here in about 15 weeks here recently. So sort of had a bit of a bounce, not the strongest bounce, but then made a high low and then moved to a new high. That was sort of done in the 15th week. So it kind of makes sense, because that was a massive decline, sort of. I think it was probably twice the length and twice the size in terms of percentage and stuff there. So in comparison, it's probably pretty reasonable. So, but I think the NASDAQ's still holding on pretty nice. I mean, the last couple of weeks there, we've just sort of seen inside trading there. So just just more of a consolidation. So I'm not seeing any distribution days so far, Chris. So I'm just sort of seeing kind of, I think we're up on sort of 5. I think was, what do you call it, 5 billion sort of the volume, and then I think it's like down on 4. So this slightly lighter on the sell down and slightly higher on the up days. So
it's behaving itself.
Yeah, so far it's sort of constructive. It's sort of similar lines to what occurred in that 0203. So and you won't sort of, sounds funny, you won't sort of see those massive sort of follow through days, sort of big volume coming through there. It's sort of, it'll just sort of, it's kind of more of a building sort of process there. So the main thing is just not to see distribution days. So you might sort of see slightly lighter volume than we're seeing, but as long as we're not seeing heavier selling on the down days, yeah, I mean, that's sort of one of the Wyckoff things there, sort of after coming off those big declines there. The building process can be just sort of constructive there, and yeah, don't get too worried about not seeing super excessive volumes going up here. It's almost more important just not to be seeing
super
selling.
large down days.
Yeah, the distribution there. So, but yeah, so far it looks sort of constructive there to me. But
So
yeah,
those inside days, tighter days, not heavy down. But you're mentioning distribution a bit, which you have mentioned in your report about the Aussie. So signs of distribution taking place. So if we contrast that to what you've just said to the NASDAQ and the growth side of things and sitting. So what we've seen here is 2 heavy weeks on the Aussie, whereas in contrast, the NASDAQ was sitting tight within its range. So what's this distribution and how does it impact our market?
Yeah, so we sort of rallied up that last sort of rally up there on kind of lighter volume, and then we saw the sort of spike in volume at the high. So when you sort of run, and then you see a big spike in volume, that can be exhausted. See that was that 1, 2, 3 weeks ago. That was the high. That was one of the highest volume weeks. Was the week of the high. So the previous 5 or 6 weeks up with very, very light volumes. This is what's concerned me about the Aussie market, is we've sort of the last leg up here, very low conviction, light volumes, which is not a strong sign. Then we sort of exhaust into the high and big volume, which is sort of often a sign of distribution. And then we've had 2 decent weeks down here on heavier volume since. So they're kind of bearish signs here. So this is sort of like, to me, it's like, don't the US market's still looking pretty reasonable, pretty solid, but the US market is the Aussie market is definitely looking a lot weaker. There is definite signs of distribution taking place, so that's a little negative to me. So I've seen BHP report today. I think sort of rising costs in there, and sort of outlook not as maybe as robust as everyone was hoping for. So yeah, and those sort of materials, they're the ones that have been, the recent rally there, very, very light volumes into that high as well. So that concerned me as well. So seeing some of the energy stuff, the coal stocks turning down, sort of some of the oil stocks turning down. So yeah, I'm just concerned what they might mean for the index, and just distribution signs across our index, and quite bearish off the high here, so yeah, just a little concerned by the Aussie market activity here, actually. So so just being in the right sectors, could be really important here.
Well, that takes us back to the start of your report, technology, healthcare, and biotech, that we'll get to in a second. The Dow Jones. Now, you're talking about the overall US market. The S&P is obviously a broader indices, but the Dow Jones is the older one. And what I find interesting, that when you've put it in the report this week, I'm looking at this tight congestion here over the last couple of weeks. So you were saying the Dow Jones has had inside days. If we just look at the open and the close these weeks, that's super tight range. And if we put that in the context, we're definitely in a high inflation environment. Bear markets, not a phrase that everyone's afraid to use anymore. We've been there, we've had that washout, and we've just seen reporting season from the US. So they're normally by themselves volatile periods.
Yeah.
How do you read this compression on the Dow Jones here?
Yeah, it's nice and tight there. I mean, it's actually more constructive than anything else. I mean, I was looking for really sort of next little, weakness into sort of end of Feb, early March. That's sort of my little timing here. So the longer it holds here and stays tight here, I'll view that as being more constructive, Chris, there. So it may not come back down to that bottom range. It might this sort of drift sideways through another week or 2 here and doesn't sort of sell off, then I think it'll, more than likely it's going to resolve itself on the upside. So just not seeing too much weakness here so far. Not too many, I say, no distribution days, really, no sort of strong selling there. So I know some of the getting a little dull there, but yeah, I just, so far it's sort of still in, consolidation mode here. So this is sort of, really, stocks had a bit of a run, sort of cooled off, had a bit of a bounce, should have really drifted off here. Hasn't really drifted off much. So not really getting sold down. So it's sort of hanging pretty tight here. So yeah. But I mean, still plenty of bears out there. Still, everyone thinks, the recession's coming, and there's 1,000 reasons why everyone thinks the market's going to go lower here, but price action is not saying that. So we now sort of cycle here, and look, to be honest here, everyone's expecting the worst from the data, and the data hasn't been negative either. So everyone's expecting a recession, everyone's expecting the market to go lower, everyone's expecting bad data, but none of that's played out so far. So yeah, so it's interesting here. I follow, I think we guided by the price action here. Yeah, I would like to have seen a little bit more of a deeper pullback just to sort of get a better entry here, but what's more important is just not sort of seeing the signs of sort of selling there. So but yes, so far it's still sort of constructive. I can't sort of see anything too negative in there so far.
Well, that's positive. And if we look to the trading shares this week on the ASX, remembering that you have been saying for weeks now, possibly months, technology, healthcare, and biotech has sort of been that leading group in the US. They've been getting conviction, the rallies, the volume. Our market's a little bit light on the technology, our biotech's different, and our healthcare is heavily weighted towards some. But if we start off and have a look at one in the discretionary space before we have a look at healthcare, you've got Eagers chart here, and I remember back here where you've got this red box. This is a time where we were doing our reports, we were COVID lockdowns, cars weren't selling, properties weren't selling, and talking to dealers running Bentley, Aston, Roller, BMWs. The teams who own those dealerships were saying that was their worst month ever here, ever. And then by July, like the 2nd or 3rd of July, they'd already met their sales target for the month.
Every analyst would have been telling you, do not buy.
You do not buy
in this space.
Yeah, do not buy anything at all.
Yes.
And then within 2 months, they were breaking records, and the sales teams had their sales targets done by the 2nd day of the month.
So what's that tell you, Chris? When everyone's telling you, like in uniformly, do not buy into this sector.
It's that's what the crowd's done. That's what the herd's done, and that's kind of what you're saying here. They're all saying the market's going to drop down to the Dow, and we're probably a bear market. Here we come. This is a recession. It's around the corner.
Yeah,
that's reminiscent of back here, but that was a pretty good rally in anyone's book. So I don't know. Is that the lesson we're taking from that period there?
Yeah, I mean, obviously you got the clear signs of, big volume taking place down there as well. So sort of, signs of accumulation. So just interesting that old chart there. But I mean, I think since sort of then we've had a nice pullback. What's probably most interesting there is we've had that nice bounce off that low in sort of mid 2022. That's kind of an impulsive bounce. And then since then we've sort of gone, sideways. That's a little tight contraction there. So that's a little sideways, sort of little sort of pennant flag, sort of kind of more of a descending sort of type pattern there, but they normally resolve themselves out how they've gone into that pattern. So they've sort of rallied up into that sideways move, and they normally oftentimes they resolve out, they pop the same way. So look, there's no guarantees here, but that's the odds. Prefer most of them break out to the upside here, not fewer to the downside. And the volume the last couple of weeks is pretty interesting as well. So we're sort of seeing some accumulation there. So that volume has gotten lighter. So look how light that volume got 2 or 3 weeks. Yeah. So look at that through there. So sideways is just just doing churning here, no volume. So no selling really going on through there. The stock's held pretty tight, so it's just gone marginally lower each time there. So a little a little false break in there, but just stay pretty tight here. Just seeing a bit of volume here. So sort of, so it's sort of one that I think looks going to pop out here. I think it reports there soon here. But I thought that looked pretty constructive. There's a few charts here look pretty constructive to me, but this is sort of one that definitely looked pretty good.
Well, I did see a theme in your charts this week, but we'll move over to Sonic Healthcare, obviously in the healthcare space. Somewhat more on the industrial side, so less expenses on the R&D than other heavyweights on the ASX. And looking like this congestion period here coming down tighter. FB, nice signal there for the false break,
Yeah.
but it's come back under that level, still within this range that you've drawn out here, this channel. But I'm going to clear this off the screen here because when it reported, it came from the low, almost the low, almost to the high. So how do you trade that, Gary?
Yeah, and that's hard to. Obviously, I was surprised actually that Sonic went down to a new low there. So I was quite surprised actually it sort of weakened off into the result there. But obviously that, you know, that has sort of gone to a slight new low, bounced back there. It's interesting actually. I was sort of just flew back from Melbourne last night, and on the way back I was reading some Wyckoff. And I was reading the back end of the book there, but different phases there. But that, you know, that really does look like the, and the, I think it might be phase B, phase C there, where you're sort of coming into your deep low, and then that's the, the last rally is a bit weak before the low. It goes into your low, into your spring, and then it accelerates out like that. So that is a sort of spring, pretty powerful move. But that's, to me, I think that's a pretty bullish bar there. So any sort of pullback into the range here will be an opportunity. It's a sector to be in there. I think it's a cracking result as well. Just shows the sort of growth there. I think they're pretty well cashed up here, looking to make some acquisitions as well. So
still doing the buyback, I think, and
yeah. So it was just a pretty sound result there. Pretty strong outlook. Pretty weather the storm here, and which is makes all sense. It's I have a sort of similar view as well. These sort of healthcare operators are sort of been held back a bit here. I know they picked up a few short-term gains from all the COVID activity, but it's disrupted, the main business, and it'll take a little bit of time to get back to normal there. But I think we're sort of seeing that result there starting to normalise, and kind of ready to grow again. So that's, it looks pretty good. The volume bar is pretty bullish there. So you're looking for any light volume back into here, any retracement there is an odd tap. But that looks like a really nice spring low there, sort of so classic. Wyckoff sort of pattern there. So and the volume criteria meets as well. It's been pretty light volume through here, and then we get the big volume at the low there. So this looks pretty good. This is definitely where we want to be. We're just hoping for a bit of a retracement back into the range, sort of somewhere $32, $31. I think we should be sort of adding in there on any weakness.
Well, that's a good one that we'll keep watching on the Sonic side of things. If we move over to JLG, seen this one being a phenomenal gainer over that period. Look at that massive return, that massive chart.
Yeah.
$1.50, $2, $9.50. But same thing again, you've got us here in this kind of like a descending triangle, some sort of compression pattern. How do you seeing this one trade out? Maybe a false break? What's happening here?
Yeah, so look, just had a pretty large correction there, sort of big sort of 50% correction in price there pretty quickly, and that's almost like an expansive sort of top two. Had a what I consider to be that first correction there, Chris, will be the largest correction of the move. So that's what we call an overbalance in the trend. That the first leg, no, not that one, the first one there. So that's overbalance. So basically that's the largest correction we've seen in the whole move. That's basically overbalances the trend. So when we see this is a great lesson for everyone there. When you see a stock that's run like this pretty aggressively, has this overbalance of the trend, so have had the largest correction of the move, so back into early 2022, one or two things is going to follow from there. Okay, majority of the time, so probably 2/3 of the time, maybe the 3/4, you'll go up and make a lower high. And mark your sort of B wave, and then you'll have your C wave down, and then you go into a larger decline. So that'll happen probably 2/3 of the time. 1/3 of the time, you'll go back and retest the high, and if you get a false break of that high after that overbalance, then that is a cracking short signal as well. So it only comes after the largest correction of the move, so basically overbalancing the trend, but oftentimes they go back and they'll retest the high there. So I think one of our coal stocks might have made a new high, and the other one might have made a lower high after overbalancing the trend. And then we know what's happened since then. They're starting to sort of come off here now. But it's a great lesson there. So one of McLaren's sort of things I've learned from Bill McLaren years ago, but it's just one that I've seen over and over again as well. And then we've had a pretty large correction. Since then, we've had a bit of a bounce, come back in a little ABC. There's a few little concerns with that chart still, just because there was a bit of selling on that first leg down there, Chris, that little sort of the ABC, the first leg down the A, there's a bit of selling in there, maybe a bit of exhaustion into the low there, but that's still sort of selling. Had a bit of a bounce on somewhat lighter volumes, okay, but and then we saw some selling there. We did sort of start to see the selling dry up a little bit towards the end of that move and then come in. So that was sort of quite good at the fact that the selling did dry up near the low, and then we sort of saw some buying there. So I see that it's actually updated today, had a pretty good one. So that stock has actually popped there. So has followed our charting principles here. But yeah, so maybe this rallies up here. I mean, it should actually rally back above $8 here, Chris. So if the measured move here is that sort of, what's that, 5 down to 8. And this rallies from sort of what, 550, should go to, maybe somewhere in our 850 is probably the measured move there. So if it does sort of that, projects the first leg up, can go, could go up, a reasonable amount here. So, it's interesting business, John Lyng. Just probably the valuation might be a little high there, but still the growth business. So they're always going to be valued high, good, strong businesses that grow.
So that's a good one to watch. As you said, it's already pops today, but there's still a fair upside to it. Just what the risk reward ratio comes in on the entry.
Yeah, exactly.
This one, the next one we move to, Clinuvel, CUV, that is one that we just consistently talked about week after week after week in the 30/30 report, being this stellar performer, strong momentum leader. As the market was already in the low, you went through this last week in greater detail. They'd already made a higher low, so we'd already had them in the leading groups as the market was tanking for weeks. And then when the market turned, it was still leading. So as you've said, when the market turns, you want to be the ones that have already made higher lows, because they'll often lead out of it.
Yeah.
That you've covered a lot, but this last 2 or 3 weeks, it's come back a fair bit. What's catching your eye now for this trade?
Do you know what's really catching my eyes? It's actually when I went back and looked, I was reading Monster Stocks, which is sort of a study of all the biggest winners, and just going through those winners. And I was sort of thinking, okay, well, sometimes like a stock like these sort of biotechs, they've already had a good run already. So they've already come off the lows pretty aggressively. They were all making higher lows in October when the market was making lows. So it's sort of showing relative strength, which is what we want to see from our leadership group. And then they had the really strong rally, which is, again, what you want to see from your leadership group. So it's followed all the classic signs there, sort of making high, low, when the market's finding a low, being the leaders of the pack, basically running, leading out of the lows. And then, what happens after that? So you get your little pullbacks and stuff there. So when I was looking through all the monster stocks, all the stocks that went on that had the strongest moves, I could barely find a pullback lasting longer than 4 weeks. It was almost impossible to find. So they really just came back for 3 or 4 weeks only, and then continued to go. And obviously, the building process takes a bit longer here. You can sort of see it, build. So it takes a bit longer to build, and then the relief is sort of pretty quick here. But that's sort of like, the thing about that's sort of how that's how markets sort of move as well. So I mean, the bear market, obviously, we're talking about these bear market rallies. So it goes trends down, and all of a sudden you get this, really sharp move up. So the bear market rallies can be short and sharp. So the same thing happens in bull markets. It's sort of like climb, and then they release. They're really short and sharp, and then they go again. They climb, and then they release short and sharp, and then they go again. So you only really get, from what I could see, looking through reading through monster stocks, they're all the best performers there. I struggled to find pullback that lasted longer than 4 weeks. So it sort of told me, if you get a leading stock here and it's pulled back 4 weeks, and if there's not a lot of volume selling there, and what are we seeing the last 2 weeks on this stock here?
anemic. And
it's
in
anemic.
reporting season, it's volatile. We're seeing
Yeah,
huge volumes. We saw
yeah,
distribution portfolios on the
yeah,
ASX. We saw transitions.
yeah.
No, it's not being sold down.
So we saw, that first week, which is a wide range, which is, wide cost sells. If we get a wide range and we're going through in a lot of buyers and sellers in the market, then that's normal to see the volume up. So that's normal here. But then if we're sort of selling off here, then we should see volume again. So we've seen no volume there last week. That's a reasonable size week. And then this week, last week again, even less volume. So, mate, no one's selling the stock here. I'm just looking for. So yeah, just history told me this has followed all the leading signs here so far, being a leading stock. The leading stocks, from what I saw, only pull back 4 weeks. So if you get a 4-week pullback, we should be trying to jump it there. And that's usually they sort of come back towards the 50-day moving average. Those are the things that those momentum stocks do. And the second thing is obviously just normal sort of structure of a trend is to sort of come back and sit on top of the old high. So so you can look sort of the body there. So I do like that sort of 22 zone there, but this is not showing any weakness here so far. So yeah, hopefully she can come back in there. But yeah, just again, we're just what's the market telling us here? Sort of it's showing pretty strength there. It's not no selling going on here. So rather than sort of judge the market, and I'm just trying to let the market guide me and tell me what it's thinking here. So so at this stage it's sort of showing all the sort of classic signs of strength there. So I just think it looks pretty constructive.
Well, if it is a monster stock, I'm glad we've been through this analysis, because we can look back in time and go, well, there it was, 4-week pullback, and off it goes.
Yeah, so look, I can be wrong here. Obviously, there'll always be exceptions there. But I'm just looking at sort of how the stronger stocks sort of behave historically. Go back and look at them and study them. And that's sort of it's obviously what William O'Neill did, was sort of study the strongest sort of stocks. That's why those sort of cup and handles are always present in those sort of stocks there, because they go up to the high there and they congest under there. I mean, this one's done a cup and handle there as well in that little tight, on the daily there was a perfect cup and handle there, and those sort of tight, that little tight price action there as well, So yeah, so that's we're just seeing those sort of all the classic signs there. So so that's. Looks pretty constructive to me. Just says, there's a few stocks out there. I think I'm still looking at some of the tech stocks there. Some of the valuations are still pretty low. I'm looking through some of the tech stocks there, looking at the valuations that the market's got on them there. You find this with analysts and stuff, is that in bull market phase, when everything's going rampant, they have all these excessive valuations on them, and then they eventually sort of shoot through them, and they just keep moving those valuations up towards the market. So if they have a $10 valuation, it goes to $12, they might move it up to $11.50 or something, or 11. So that's because they're like, well, hold on, you're below the market, the market's above it. You got to keep moving yourself closer, And then the same thing happens on the downside too. The valuations, obviously the growth crunch, everyone moves the valuations lower and lower and lower, and they keep moving it towards the market. Because if you're sort of at $5 and the stock's only at $3, well, hold on, you obviously got it wrong. So you need to get closer to. So you find those analysts just keep moving. Oftentimes, analysts are just moving their recommendation closer to the market price, and then substantiating the view based on macro conditions or economic conditions. So it's interesting here. I'm sort of looking at a lot of the growth stocks there, and seems like most of the market's got valuations sort of not much higher here. So no one's really sort of projecting too much growth in the growth stocks here at the moment. But maybe that's just after a growth crunch here, Chris, as well, which is typically how analysts do behave. They tend to just follow the market rather than have the balls to put out a big call and stand out and show leadership qualities. That's pretty rare among equity analysts. But that's probably not their fault. Maybe it's the firm they work for and stuff there. But yeah.
Yeah. Well, it's good to see at least the reporting in the updates. We're seeing the analysts churn out the numbers, so they give us good breakdowns. But if we look through, you've mentioned a leader, you've mentioned an overbalance trend. We'll get to that chart in a second. But before we do, we're going to have a look at Santos, because looking at these chart here, look, you're talking about energy prices being the key ingredient to inflation. You've talked about that before. We'll put a link on the screen now on YouTube so that you can see that 40s and 70s breakdown that Gary went into in great detail. But Santos, we see here, look, it's been rising, and then fallen back, and then had a bit of congestion here. It kind of hasn't been able to get another leg going up. And you're kind of favouring the downside here, are you?
Price action is, it's we've sort of broken that pretty sort of strong uptrend there quite a while ago. It's probably, it's quite some time since we've sort of seen the high there. Obviously, the oil prices has cooled right off here. But yeah, the price action is sort of showing, we saw heavy volume on that first leg down. We had a bit of a bounce, a lot of volume. Saw pretty heavy selling on the second leg down. Had a pretty light sort of, timid bounce here again. And then we've shown heavy selling on the last 3 weeks here. Now we're starting to basically push below. So I think last week we went, that was the lowest close for the last, 6 months or something. So looking pretty vulnerable to me, looking pretty weak here. There's definitely, got a series of lower highs in there. We've got distribution type behavior through here. Again, I mean, everyone's getting talked into the, be long energy, have long energy in your portfolio, but price action is telling us the opposite at the moment. It's showing real vulnerability. And, the charts are sort of indicating here we could see a larger decline here. So, this is good signs here for inflation, because obviously, if energy prices and oil stocks and that are cooling here, it's an indication that, maybe energy can continue to sort of weaken off here. But yeah, just it's interesting. It's all. It's sort of, again, everyone gets, you got to think there, 3 months, 6 months ago, Chris, everyone was sort of, pretty buoyant energy, and that's all everyone was talking about, be long energy, so when everyone's telling you you must have some exposure in that sector after it's already happened, that should be a warning here. It's like everyone telling you don't go near that sector. It's classic sort of the retail. I mean, like, you think about the retailers before this sort of rally we've had here in the last 6 months, 9 months there. Like, everyone was saying, "Oh, recession's coming, don't be long retailers," and they were on their knees. And then they've rallied hard here. And then, a month or two ago, before we sort of started talking interest rates, everyone was like getting bullish. Retailers are going really, really well. So talk you back into them at all the wrong times here. So you really got to be watching your sentiment, listening to analysts up there, sort of, if you're listening to AusBiz or CNBC or whatever you're listening to, and all of a sudden 3 or 4 analysts come on in a row in the same day and all tell you exactly the same thing, that should be a warning sign for you. Okay, so if you're long those stocks and those sectors, and all the analysts are all bullish, all equally, all at the same time, and telling you must have exposure in this sector, you have to be long this sector, and it's already run. That should be, at the very least, you should be tightening up all your stops on all those stocks in that sector.
It's definitely not the first time, because this is exactly what Stan Weinstein said in his book about the 70s, wasn't it?
Yeah, I mean, look, I get, this, as we've sort of shown in those 33 reports, Chris, I mean, those leaders can lead and they can keep running there. I mean, usually what happens there is they run hot and everyone thinks it's a flash in the pan, and they run a bit further. And then some people go, "Oh, maybe you should have some exposure here." And then they continue to run further. Everyone goes, "Oh, maybe we should start looking at the sector." And then they sort of, finally has the last leg up and everyone's saying, "Oh, you must be in this sector." You have to have something, so there's the whole psychology changes on all the way up. And that's why you sort of got to be careful about following momentum there. I follow, there's Jason Shapiro is one of the market wizards who got interviewed there a couple of times, and he's got a pretty interesting sort of Twitter handle and puts a lot of commentary in there, and he's sort of more psychology driven there, but he makes a lot of, I don't know, he talks like I think, and I just he's always wary of the crowded trade, and then everyone falling into that trap, and then it's just and he literally will just trade around the psychology of the market. basically, to the point where everyone gets so convinced on a view that usually means everyone's already bet on that view, and there's no one left to bet on it, and then we know it turns. So it's the whole psychology is interesting. So obviously you read about psychology of your own when you're trading, but also looking at mass market psychology of people moving together. And I mean, it's there's that the old worn phrase there about when you see whether it's the New York Trade Journal or it's the Business Week or whatever else, you see the bullish article on the front page of the newspaper or these magazines. That's they usually sort of like lights flashing, as in that you should be concerned that talking about the US dollar being crazy, and then by the time everyone's reporting on it, and that's time to sort of get out. So just have to understand these things. That's the psychology of markets.
And they repeat time and time again. And one that we can probably look at now is New Hope Coal. You talked about the overbalance of the trend earlier, and I'll try to draw this one on here where before we look at ascending trend lines, we've got this rising. Well, actually, there were two reasonable corrections in here. So sort of this one here, but then this one got really big and then came back hard. So is that kind of the overbalance that you're talking about in a trend?
Yeah, that's right. So that second correction there might have been pretty similar to the first one in size. So might have been sort of similar size there. But then obviously this last leg here has gotten pretty vertical and then overbalanced down the first sort of the first sort of circle there. So that's basically overbalanced your trend. So once that happens, if you're still long, haven't run a stop on it, there's a good chance you'll get a bounce here. So you'll either come back maybe something like 61.8% of the trend, or maybe 3/4 of the range. Get a chance to resell it again if you're smart enough to realize what's happened here, or you possibly there's a small chance it might go back up and retest the high, go marginally higher there, and then cool off there. I think Whitehaven went back to retest the high, might have just failed by a cent or two, but went and retested the high. But majority will do what New Hope's done here and go and make a lower high, and then. But so what you're sort of seeing there is you see aggressive selling and that overbalance. And then you see your bounce. The bounce should be much lighter volume. So go back and study BHP and Rio back in 2007, 2008 when they made I think when BHP went to 50, Rio went to $100, made the last leg up, or the first lower high. That was low volume move there. So when you see volumes that are probably half of what they were on the downside, and that should be that's your confirmation there that that this is just a lower high here, and this is the last chance to sort of sell the stock here. And then what we're seeing here, we're seeing big volume again, so pretty aggressive. So our sort of our theory around these sort of vertical blow-off trends is that they often return to the last acceleration point, which is $4 for New Hope. So most people aren't expecting to come back down there, but our theory of sort of vertical trends tells us that 9 times out of 10, maybe even 9.5 times out of 10, they'll come back to that point there. To be honest, I've never seen a vertical trend not come back to that point. So
you have asked a few times for
I'm sure there's
found one.
Yeah, I'm sure there's some out there. Yeah, but yeah, they often come back there. And I noticed that was the 320 there was sort of that was the third accelerating point as well. So that's often a point they can come back to as well. But I think at this stage here, it just looks like it's going to come back towards $4 to me. So we're seeing pretty heavy selling in there. And now we're sort of no one can understand why these got sold off at the time. They've gone from 7 down to 550 or 520, but now suddenly the price of coal is starting to cool off here. So market's always leading here, as we know. I don't know. I know personally, Christian, we've been getting grief telling people to be careful, sell these things. Whereas at the top here, anything around sort of 650 there, everyone would have been arguing, black and blue with me that these things are pumping out so much cash. You'd have rocks in your head to be selling them.
Yeah.
So, yeah, which is always a good sign too when people want to tell you got rocks in your head for selling and things like that. It's like, okay, yeah.
So I'll happily sell, and I'll leave the rest of the upside for you.
Yeah, I was just disappointed we couldn't get shorts on these things, but yeah, I generally sort of stay away from sort of shorting individual stocks here. I like sort of the indices or ETF, sort of something simple there. But yeah, we just but this is good signs as well. So the fact that we're sort of seeing some of the energy complex materials commodities starting to sort of break down here, that is good for an easing of inflation. So really, we don't want to sort of see the 70s or 40s sort of style where sort of this long-lasting inflation there. We want to see, the Fed and the RBA get, finally our guy's finally woken up here. He's copping a bit of heat for it, but if he'd moved a little subtly earlier, he probably wouldn't be copping as much heat here. He just sort of, unfortunately for him, he took the opposing view there a while ago and then got egg on his face, and now he's having a backtrack just because of what inflation really means. You really need to get in front of it here. We don't want to be having 8% there. So I know everyone's getting upset about, I've got a mortgage too. I'm going to have higher payments there, but for the economy, it's better to have 1 year of higher mortgage payments than have 5 or 8 years of
destroying
excessive inflation there, because that'll just kill everything. So, we as community and economic members of our country there, we got to take it on the chin for a year, and pay a bit more on our mortgage, unfortunately. But yeah, if we do that, I think the economy then can bounce here and recover. But yeah, what we don't want to see is imagine 8 years like the 70s there, where you got 7, 9, 11% cost rises every single year. I mean, people are complaining about some items going up 10% this year. Imagine if you had 8 years in a row, things were up 10% every year. A steak, a burger, a beer, just coffee, every year 10%. I mean, gone from like $4 to $4.40 to
just
$5 to $5.50 to mate, it could be $8 here by the $9 coffee in 8 years time. We don't want that. So so we've got to take our medicine here, unfortunately. But hopefully I think if we do that, do it take it quickly here. The Fed's doing the right thing. I know. So the Fed basically he's not sort of copying as much there, because he's sort of been early here, well scripted, and they're already halfway there. They've already got it sort of. They're already starting to make the mark. They're starting to get the results that they need. They're already starting to see inflation turn there. So
understandably, there's a slightly different economy where their housing prices or their mortgages are set on the 30-year versus ours on the cash rate. So the mortgage pain hasn't been as severe. Well, the yield curve definitely did move fast, and that caught everyone on the wrong side, where bonds and equities moved together and got destroyed. That is a little bit different, isn't it? At least for the mortgage aspect of it.
Yeah, it's different. I mean, there's obviously how the US property, even UK property and Aussie property, Aussie property is a lot more secure there. I think in the UK you can hand your keys back. The US you can hand your keys back. The UK you can renegotiate even after you've signed a contract. Wow. Which is bizarre. So you can actually exchange, sign a contract, and then the day before you settle, you can renegotiate if the market's moved again. It's like, what? So yeah, every country's got nuances, very different. But yeah, we're pretty secure here. But yeah, it's I think the other thing, I don't want to go off on a tangent here, but I know that everyone's worried about these mortgages rolling out at higher rates and stuff there. That is so well scripted. Everyone's been talking about that for the last 3 months, about how damaging that's going to be. The fact that it's been so well scripted tells me that it's not going to be damaging, because everyone knows it's coming. It's always the things that you don't see coming are the ones that hurt and surprise. So I think the fact that everyone's been talking about all these mortgages rolling out here, that people are already been starting to look at deals and look at ways of sort of easing that off. And so it's always the ones that you don't see coming are the bigger issues. The ones that are well scripted here, I think.
They're not as much of a shock to the system.
No, they got
been able to move for it.
Yeah, that's right. People have been known for the last 6 months what's coming here, so starting to prepare for it.
There's some good insights on both trading and the economy. But to that point, we may wrap it and say to the right-hand side, if you want more insights on what Gary's talking about here, ascending blow-off tops, talking about 40s and 70s inflation, or how he's looking at previous periods like the 0203, we've created those snippets in the right-hand side of sort of trading strategies and economic breakdowns. Also on the right is a playlist of the Friday reports where we look at leading momentum companies like what you've seen with New Hope on the screen here, and we've also done Clinuvel as well. Finally, on the left is Gary's Twitter handle if you would like to follow him there.